Hey guys, this is the professor at Day Trading for Success. I trade live every morning, and you can come over and see it for free if you want. Usually, I start around 9 o'clock, and I set up the charts of and the scanners because we have some custom coded scanners to find the stocks that you can get yourself, and I have links to everything. And then a lot of indicators you might see on this layout that confuse you. You don't have to have all these indicators, but they're ones from prop firms that I use, and that's how I go in and out. And then basically what I'm doing once the market opens is I'm calling out, I'm quarterbacking, they call it. I do that for a lot of traders in multiple sessions throughout the day. But you remember, you're responsible for your own trades. I'm not a licensed financial advisor, but basically I'll call out the trades and then we'll take them live. And our goal for this month, which just ended, was to do a minimum of 150 a day to $500 a day. So today after stream, I traded a little bit more for those guys that popped on after stream, and I traded this stock, which added to what I had made. And I just did a little bit more, a few trades with Charlie to get this, who's our assistant here that helps with the chat, to get some levels in here and do some quick profit. So this, guys, if you want to keep trading when you see this video throughout the day, this looks pretty good. It's off of a catalyst, but it started to consolidate, so I really like it. For those of you that are watching, you know, I was kind of going in down here at this level. I would always pop in long here and go short here, and then I started to go short here since it wasn't making it, and then go long in this level. And I was going in at 200 shares, which was half, would have been about half my share size. But anyway, to see how we did at the end of the month, let's bring this on over here. We finally finished the month. So this has every single day reported through Charles Schwab, how I did, 6,579 on this particular challenge. We absolutely beat the 150 because you divide this by 21 trading days, and you can see that we did. Geez, I didn't even see what the average was. I should do that right now while you sit here and watch me work my calculator. So we had 63,579 divided by 21. So that's not right. 6,579 divided by 21. So $313 a day. So that's pretty good. I was about to see, so you could make this much a month. Well, it says how much you can make. So $313 a day if you're retired and you're just trying to augment your Social Security, or if you're just, just trying to help out with the mortgage, with the car payments, with the food. You don't quit your job because you only need to trade like an hour a day, and hopefully have an afternoon, evening job depending on where you are living. Actually, it depends on where you're living, but you don't need to trade for very long to make this kind of money. So it's a very conservative strategy. Who am I to tell you how to trade? Well, I am not a licensed financial advisor, but I mean, here's my averages. There's the one red day. So I just added up these 21 days. You can see the average here, like it was like 88, 83, 100. This is the worst day, I think, 66, and a 66 over here, and then over here was a 7. But anyway, this all added up to 89.6%. I'll go real slow. If you want to do the math yourself, you can pause your screen. 21 days, here are the numbers. So some people like to do that. He didn't even show us. But obviously I can't do anything with the data that comes through here. A lot of people use this. This is a great way to get your overall how you're doing. And there's, of course, there's how we looked for the month. So, it was a great month because we didn't get to the highest we could make, but we got well over the minimum we were going for. And today I did have one bad trade. I think it was with NVIDIA, maybe. No, I'm sorry, Tesla. Yeah, because this used to be $124. So I had a bad trade in here, or it would have been more money. And then we wanted to make it up, and that's why we went over to Baba, and it was all over the news today, and then picked it up over here. So what I'm going to be doing today is we're going to break into a recap of every trade I took and condense it down so you can see. But you can also watch the entire live stream on the channel. Just go into live on the channel, and it has all of the videos. In fact, let me bring those up for you real quick.
Welcome to Day Trading for Success. Every morning, join the professor, a former math teacher turned pro trader, and watch him trade live for free, sharing proven strategies, breakthrough indicators, and lessons from essential trading books. The professor is not a licensed financial advisor. Consult a licensed financial advisor before following any demonstrations you see here. Subscribe now and click the notification bell so you never miss a live session.
So I'm back here. So if you go to my channels, guys, of course it has all, if you just go under videos, there's over 400 videos. They just congratulated me through YouTube, but there's a lot of videos and a lot of them are recaps of this just challenge for this month. And last month we had a smaller challenge. We were just trying to do $100 a day, but then you go into all kinds of, different videos that have all about AI and prop firms and all about the 10 most important rules and all about the RV strategy. You can get free indicators here all the time. You just have to keep your ears open, keep your alerts on. You learn things like, what does a margin call look like? That happened to one of our traders. I trade in a group here. But I mean, there's just tons of videos here. But what I really wanted to show you was these are the live. So a lot of people overlook that you can go to the live, and then you'll have all these ones that I trade live every morning. And then there's also playlists that you can go to all the different playlists here, and you want to zoom in on certain things because there's a lot of seasons. I've been doing this for a while now. So anyway, there's just a lot of different videos that you might want to look over on this channel. But and I hope I see you in the mornings around 9 a.m. Just subscribe and put on your alerts. It's totally free, and our strategy is basically let me open up the strategy for you guys here. Let me just briefly open this up so you can see. So basically, I didn't mark it out on this. I just came in and freestyle trade. But basically what you're doing is, just briefly, I'll show you here. What you're doing is you're going to get on a 5-minute, 10-day chart, and you're going to mark your Fibonacci levels. And this one doesn't count because it opened up today here. So you'd go from here down to here. So let me mark that level. So you just click on your Fibonacci retracement. You mark the high, bring it down to the low. It's always left to right, right? It can be high or low to high, but it's always left to right. And what you're doing with this is you're creating support and resistance levels, and you're channeling. You can see when you put out nature's mathematical formula, which is the oldest strategy there is really, that you will get often perfect places to trade throughout the day. And then you do it again on a 2-day 5-minute, and there's all kinds of ways to get this layout, guys. Let me maximize this for you so we don't see the thing on the bottom. So this is a 2-day. Again, the market action wouldn't have started yet, so it would be unfair to take that. So really we would take the high right here to the low, the same low again, and we would mark this as a 2-day, and that would be right here. I'd make this a different color. I just want to show you how it gets your channel set up. And this is a certain style of trading developed by a bunch of professionals that came out with a book, the first book that started it all, Day Trading Volume 1. This strategy is still used today. It's a large cap scalping strategy. So this is a lot of traders that came up with, for beginners, how to just mark these levels to see how they're going to be respected. Now today we had a news catalyst, so it just left. Once you have the news catalyst, then you throw this stuff out the window. But typically what we do is you do it like that, and you're looking for a stock that's consolidating. So if we went to say Apple, I have a little bit of money on that today, and you look to see what happened, right? Of course, that just went up recently too, but you see the different fib levels, and then you mark historical data. So what is historical data? Historical data is where the stock has stopped and abruptly turned around. So anything can be historical. Fibonacci levels are historical data. The ATR levels are historical data. You see them on the 1-minute chart that looks like a big mess right here, right? But when you go to trade, it's not a big mess because you're open like that, and you can clearly see. And then you have your ATR up here, which is the high level you shouldn't expect to break, or it will be trending, and this would light up and let you know. This tells you what the overall market's doing. That's the market pulse. This tells you what each different trader's doing, depending on what time increment they trade. So you know they're trading green. They're going to jump in. You know, when it gets across one of these levels here, it's telling you they're green. Those vertical levels are showing you. There's all, and of course, this is the Meter Pro, which shows you inside the candlestick. So guys, watch the content and you'll learn a lot more about the custom indicators. You don't really have to have them, and the strategy, which is basically just setting a range, setting historical data levels that may or may not be respected within that range, and waiting to see if there's something you can trust, and then taking your trades for short-term scalp. You're trying to go, like in this particular case, you're only really trying to stay in it for 6 cents if you go long and 5 cents if you go short. This is called the risk oscillator. It gives you the average of the last 9 candles and which way you should go. Then it tells you how many pennies you are in the trade and what your overall P&L is. It's an amazing indicator, so you don't have to do it in your head. So right now, it's a time of day where things are very slow, and Apple's a very slow dinosaur moving stock. But you get in with 100 shares, and you got $5. You do 50 trades, and you got $500. So it's or $250, right? So it's just really helpful to have the indicators, but you could do it on your own, and you're just looking for channeling. See how it came down and respected the fib and came back up. Respected this market magnet level, came back down, then bounced off the fib, then hit right here, came back. It's like almost like taking candy from a baby. The one thing that you have to remember, which is so important, is what is your max loss, and stick to that. Now I trade a little bit differently because I came in from swing trading where I don't go into my full position even when I scalp, and then I look to add to it, which you should never do unless you really have this nailed down where you can control yourself, which of course is the biggest problem for all traders, is to control themselves. But I have tons of videos about that. I'm going to shorten this video right now and just say that's what you can expect to learn. That's what you can expect to see. We'll have a different challenge next month. So I hope you come by. This is the last day of this challenge, the end of the month. So guys, thanks for tuning in. I hope that was informative, and check out the recap of the stream, or check out the live stream today if you want to watch the whole thing. Okay, guys, I'll talk to you soon, and go green out there. Hey guys, welcome to the recap. So what we're going to be doing here is, this is just before the market opens. I'm going to be, you can see right here, 9:52. Okay, let me just make sure you're seeing that. Yeah. I'm going to be pulling this picture over here, not that. Sorry. I'm going to make 2 of me here. Okay. So now you should see 2 of me there. This is me talking live now. And this is going to be me over here. So I'm going to let us both talk because I don't want to infringe on him because he's pretty cool. So basically what we're going to do is we're going to show the trade go in. I'm going to explain to you why I went in, and I'm going to explain to you why I went out. Then I'll fast forward and explain to you why I went out. So it'll be a shorter video, but with some, me using my analyst hat on to tell you exactly why each trade was taken, so that you can hopefully learn on what I'm looking at each time, learn from those moves. So let's take the market's about to open, and right now I've set a place to get in here. I just went in this big thing about how I recommend that you do not trade the opening candle. And remember, guys, I am not a licensed financial advisor, so you should seek the advice of someone licensed before you try to emulate any of this. But anyway, so I'm waiting. If it shows me confidence and picks me up here, then I think it will probably keep going, Tesla. So that's why I have it up here. But I always advise don't trade the opening candle. Face of the earth says the same thing. Don't ever do what I'm about to do right here. But I love the thrill of it. Here we go. Gonna pick me up. Almost did. So it picked me up. It just hasn't shown. There it goes. It did pick me up. It just didn't show it right away. That's a bad trade. That was a bad trade. It was like $11. So I got out pretty quick because I didn't trust its continuing move up. Thought I was getting out at about 25, 30 bucks, which is a decent trade for 50 shares. So you don't, the whole thing about this strategy is you don't really want to get guilty. You don't want to, I mean, I'm sorry, you don't, yeah, you definitely don't want to, why can't I think of the right word? Greedy, not guilty, greedy. Thank you. As you can see, this is not edited very well right now. All right, so let's go on to the next trade. Okay, so I'm still on Tesla. I did look around. A lot of stuff's gone on since the market's been open, but really didn't find any place else. I typically like to wait till you get at least 10 to 15 minutes into the market to try to get some consolidation. So we have some historical data here, as well as these gray lines are showing you the half and whole dollars, which is where the crowd trades. So you always want to look at those two. And I'm playing this short biased. I'm thinking that it is generally going to go down today, as you can see from the 15-minute and the 5-minute. And just generally the news on Tesla isn't really good. Legal woes and all kinds of other things going on. Already started to fade off yesterday, which I called out, and it did exactly that. So now what you're seeing here is a 30-minute breakdown level based on the last 30-minute candle. That's from Day Trading Volume 4, which has the 4 breakout levels that professional traders use. So if you don't have that book, you should get that about trading the open and the breakout levels. I'll have a link to it. This historical data is based on Day Trading Volume 1. Both of those books are put out by the $1 Million Margin Club. If you're having trouble controlling your losses, read Trader in the Zone. That's put out by Mark Douglas. I have a link to that. And just overall understanding is Tom Hogarth, Best Loser Wins. That's a good book to round out. I have one there. And then they're just putting out a new color version now of the Candlestick Pattern Playbook. So you want to look for that. And I know they have a deal that if you review the book, you can get a free indicator. So they're still doing that deal at the $1 Million Margin Club. I'll have a link for that. But that's the only book that rates the pattern. So I would definitely get that if you don't have it, because candles, I definitely trade with patterns. I do it all the time. It really depends on the strategy you're trading. Scalping, it's pretty important, but on large caps, not come to much of play as say a momentum, like I might trade on Lightspeed instead of Thinkorswim. This is all Thinkorswim. But anyway, right now I'm about to go short. I'm going to sell on the ask. So let's see how this trade comes out. So I'm looking for a bounce off these level historical data, a rejection, I mean, off this level, and then the even dollar. And then I would look to get out, well, anywhere that's like 50 shares. So if you see 10 to $15, I'm just going to take a short-term trade and not get greedy, and then just look for the next setup and do it again. I'll do it again. I'm going to take it. All right. So let's hope it's not doing a big retracement up here. Try to catch a few bucks there. Didn't pick me up. 344.90. Instead, it's continuing to go up. Should have picked me up, but it didn't. It was right there. So I had 36 cents possibility there. Too bad. I had a small trade there, but it just didn't pick me up. Now we've broken that other level, which is a little scary. That's when you're supposed to be going long, but that's the breakout high level for the 30-minute, where basically if you follow that strategy, you jump in to go long there. But we do have some resistances here. You got the fib, you've got the next even dollar. I'm not going to panic yet. It's already had a cushion. That's how negative I am for the day. Big deal. In fact, if it turns around with any kind of momentum, it's where I go into half my share size. I'm only in 25% of my share size, remember. So I'm not concerned at all. And I do believe there will be a rejection at this level, since there already hasn't been one. So maybe I got in a little soon, but I knew I had lots of room to add into play before I should get concerned. I'm still going to play this short bias unless everything's turning around. Nope. I'm looking down here, market pulse, looking at multi-chart alignment. Still real short money here, and I had a little cushion, which was good. Oh boy. Buy-sell oscillator says no. 346 says no. Then you have a fib right above it. 75 cents off my position. Looking for a drawdown to add if it keeps going. Oh, that was too fast, and no, I'm not going to add to that. Too close. Yeah, Tesla's very erratic. Try to go for a small victory here. You'll see that if I'm going to add, I'm going to make sure I get picked up as it was turning around. So that's why I was hovering over the sell market. That would have brought that up to 100 shares short. Well, yeah, just 25 cents would be fine. See this action coming in right here? That's price action that's just happened. And this is the overall average of that price action. So when you see it below it, it usually pulls that down. Traders are looking at this data with all kinds of different indicators. This one's called the market magnet. I find it to be the best, and it should literally pop this down, which is like a hammer, and it hits the price action and it drives it down. So as I see that, I'm getting happy that this is about to reverse and go my direction. So we can reassess. Market
There
magnet's
it went
pulling
down.
up right there, which is not a good sign. Or it just pulled it down, didn't it?
Yes,
Yeah.
it did.
It's hard to watch everything, isn't it? I guess you guys have come to that conclusion. There's a lot of good data on this chart, but to see it all at once is just got to kind of glance around quickly. And then I like to watch the price action as well.
Listen to that guy.
Right in the middle of the breakout levels. Not a good place to have trades.
Well, I'm holding this entire trade. I guess what I'll do is I'll show you what happens here at the end.
Okay, so that trade ended up being a successful trade, and I just, as the price action dropped way off of this and kept going after I profited, I decided now it was time to go long. So I've taken a long position off that Fibonacci level. Even though I'm short biased, there's always retracement. Now, another thing to keep in mind, why it's a bad trade, to start with, why it looks bad. Multi-chart alignment's all red, right? This just hit an alarm, and it turned a different color when it showed that the volume of this candle broke the volume of the last candle. So that means momentum is going down. 99% sellers here. Below the EMA crossover here on the VWAP, and you can see inside the candle how it's all going down. So you would wonder, why would I take a long position here? So I'm going to tell you why. And these are all half and even dollars down here. I believe that all price action constantly retraces, and I've been watching this constantly retrace. So it's always giving me a little bit of an opportunity, but I also this Fibonacci level holds a lot of sway in my book, right? So I'm thinking if it breaks it, and it keeps going down, so I got it at 55 cents. So 55 cents down, right? If it went down 55 cents, that's not much money, and it has all this time to maybe turn around and retrace where I can add to my position. So I'm thinking I'm very safe to play it on a long bounce, and that's why I took that trade. It picked me up. I was just going to say, I don't like the way it looked. It just picked me up before I could get out. I definitely pushed that button before it picked me up. So annoying. Talking about the level 2 started to work against me right before it got picked up on a bid. Yeah, it's swailing down. It's not, if I get a chance here to get out of this, I just want to get out. So let's see what happened. Here's the end of that trade. So I ended up losing money. I didn't like how it had broke it, and it seemed like it was the price action, like it was going to continue to go down. So because since it's channel hopping and not giving me enough of a consolidation to trade this type of strategy to scalp, and it's just kind of fading one way or the other, the retracement's kind of getting off the table here for a bit, although that is a reversal candlestick pattern right there. But I just got out and decided to go look at some other stocks. So we'll see how that worked out. Now I'm over here at Apple. I'm just explaining that you'd want to go short off this level and long pretty much where I am, although it would be better to get down here. But you are at the bottom of the market magnet, which is turning it around. Buy-sell oscillators turning it around. The momentum indicators turning it around. So all of these are saying go long. So I believe that's what I'm about to do. Now it's weak going down. Yeah, you can see here when we got down here before, it was a lot of buying. You know, if you look at the overall volume here, I'm comparing so you can compare what has just happened. And, you know, as the shorts were over here, basically, as you got down to this level, they fell off and it went right up. So the same type of thing is happening again. So that's, this Scalp Pro meter is telling me also that it's probably a good spot to think about going long. It'd be really helpful to decide when to do stuff. It keeps hitting this level here. The spread's so tight that I'll probably just take it. I'm just going to go ahead and
Mark it,
go
I
long
mean.
there. They got me at 37. Now you're remembering that Apple is just a very, very slow.
So that first
two
trade
times to fill 100
was
shares.
done there at 1250.
Yeah, it's just below.
So that was the only trade I took on Apple at this point. I've moved back over to Tesla. Apple was so slow, it was grinding, that I wanted to give this another chance. There, it went up to the 40 for a second, not to the 50. It's going to break the ATR. Wow. And it's breaking the 340 even. ATR is usually a level where it will turn around like a solid floor.
I'm going to go ahead and get in there. Did it pick me up? I went in the even dollar just to see if it could.
I went short
me
off
out
a
for a
break
minute
of the ATR.
Which it did. So I'm at 340 even. We're not going to get greedy. We'll just try to get a little bit there. So we got.
And that was the end of that trade.
45 bucks.
As this continued to drop as a knife, like a knife, just straight down, I do something I don't really advise. It was just so strong and there was negative news. I just said, let's just ride it. So low share size, no real data. I mean, the data was everything's going down, so just get on board. That's not usually the way I like to scalp, though. I like to try to get the retracements on the opposite direction it's going. But in case I get stuck in a position like this, I'd want to be short bias. So I wouldn't want to go long when it's doing this. Instead, jump in with a slight retracement and go short, which is what I just did here. So let's see how that ends up. So the trade was going against me. As you can see, I shorted, and then it was going against me. So then what happened here is I doubled down at some point here as it turned around to try to get a better position. So I got a little bit better position on the short. And then I'm looking now for it to reject off the ATR. I'm not concerned at all. This often happens where it breaks it, hits it again, and then rejects again. So in this short position, I'm actually feeling very, very confident, even though the trade's red right now. You know, like I was saying, I trade like a swing trader, so you can't count on getting the best position right off the bat, right? So you want to play into your best position if you can. Reject off the ATR. So I'm all the way up to 45 cents now instead of 20. So let's see what happens here on this trade. So as you can see, it just rejected so fast, and then I was able to make a pretty nice profit with that full 100 shares. So there was no data to read at that point. It's just like, how greedy do you want to get? Maybe this will keep going, likely. But just in case it bounces back up, just take your money and get back in it again, right? That's the logic in scalping. Just get in and out. Let's see what happens next. Continuing to play it like it's going to fall like a knife right here. I'm getting a little bit of a retracement up, and I'm looking to short it again. I'm not thinking it's gonna do that big move. It's already rejected off the ATR now. So I'm thinking it's gonna keep going down, and that's what I base this next trade on. 23, 39, 49. Tried to get it there at 56, I got it. Okay. Very happy with that position. I'm ready to add that if it keeps climbing. Tried to get out there at 18. So I just tried to get a profit. It saw me, Saw me there and said, wait. Don't give him a profit. Don't do it. Have you heard some of his jokes? This man needs to be slapped down. I think this is about to end, so we'll just go right to the end of the trade here. There it goes. 102 right there. So that picked up pretty good. Let's go to the next one. That was a six. So going back into the next trade now, the same thing. I'm looking to dip all this. The thing that is a little scary is that the MACD right here, which is based on EMA, crossovers, convergence, divergence. This is an easy way to read that. This is a custom prop firm indicator that just basically tells you go that way. So I'm going the short bias, a little concerned that I'm taking that move because of that, but I'm overriding it with short bias, and it's already done this like little pullback, just like there, and it looks like it's going to reject, right? But I may have a little pain before that happens, and I'm totally thinking that I could have pain. And up here, that time it got me, right? So let's hope it's not going to soar to new heights here. 62, 57. Watch the flow. Still flowing up. I mean, watching the level two go up and down here too, which is not good. That's a highly accurate indicator, so that's not good news for me on this position right now. See if it breaks off the 50 cent there. All right, I was looking to add up there as it turned around, but it was just not high enough to make enough of a difference to take the chance, you know. There's the rejection. Let's drop below the 338. Let's get back down there. We want to see a breakdown below 338 here on the bid. Oh, did that just get, that just got me like $2 when I hit that. I think it was about 8, but let's see what happens next, right? So once again, the same logic. You can see the trade's just about to hit. I do short as it's going up. Some people might think that's counterintuitive. This is just retracements. I'm trying to catch the retracement and then watch it drop off again, because we are definitely trading this short biased, and this, the higher it goes, the better, more excited I am about getting a really good position. So let's see what happens at 84. All right. Now you're not making a new move here. You're going to fade right back off. I have deemed it. That is what we're doing. We're going to drop down to the 338 now, which would be right there roughly. So, no, right. Broke the 39, not good. We need a rejection here. That's the 14 moving average off my position. The 9 and the 20. Goes. Now let's get down to the 338 where everybody's waiting. You get cheers. You'll get an achievement award. Aren't those the best? You didn't win anything, but you achieved by arriving. I was watching a thing this morning about, let's see where we ended up with here. AI. So fast forwarding, I just got out of the trade right here. It looked like the momentum indicator was going to turn it around. We're right at a 50-cent mark, so I just said, don't get greedy. It was a nice, good green trade, and now we'll move on to the next one. So I'm looking to go short again off this retracement back up here. So as you can see, I'm just about to go. Really, I should wait for the 339. I'm getting, as you can see, the time here is it's a little longer than I normally trade. So I'm getting impatient. Bad thing to be is impatient, but I was impatient, not waiting for it to get here, which is where I really should go short. Instead, just almost trying to force a move here. So that, let's see what happens here. Wow, it seems like this is going to turn around here and go down again. Yep, twice I could have got it in the high 50s and 60. Ah, there it dropped. Okay. Back down into the 30s. Oh, I thought I was about to enter a trade there. I guess not. I'm a little gun shy today from taking these little moves. Looking for a little bit bigger moves here. Okay. Went into the 70s. Tried to pick it up at 75. Got it. That's actually a pretty good entry, so you would think. Break that 39 level. I lose a little confidence. It came up to here. Let's see what happens. So we're picking it up here. If you wanted to see all the drama as it kept going up, thought it was going to reject here, almost, be in a better position here. Really hoping it rejects off this ATR level again. Don't want to see it break that. Let's play it out. 90 cents. So if it breaks that 340, that's really it. And it was and again I was out. Yeah, so I got out there. So that was a bad trade because we had 120 whatever it was. So, and then I'm calling it a day here because I'm past my time. So took a trade basically trying to rush it out of boredom. Got into a bad position because of it. That's a lesson learned. Overall, we were down. We weren't to the 150, but we were close to 100, and that's why I went in afterwards and started this video with how I ended up by going back in after a short break. I came back in. Normally, I start another trading session at this time where I trade with a whole group of large share size traders, but we weren't doing that today. Nobody wanted to do that today based on news and the way the market was acting. So, and we would have traded a specific strategy called the RV strategy in Day Trading Volume 1, but we didn't do it. But guys, I hope I see you in the mornings. This is what you can expect to see. It's right in front of your face, the good, the bad, the ugly, and we usually make our goal. Like I said, I'm at 90%, roughly 89.6% accuracy. That's the key. Get out when your loss is too big. Have a max loss. Get out, and then your accuracy overall will prevail, and you should make money. Okay, guys, be careful out there and go green, and I'll see you soon.